Hey everybody, we're going to spend a little bit of time talking about the personal finance issues of taxes. Taxes are something that are going to come up in economics multiple times because they have so many connotations and they definitely play a huge part of our economic system. So today is simply focusing on how do taxes impact you as a person in terms of your individual bottom line. So obviously we got to think about what our income tax is. You probably remember last year in U.S. history, excuse the bell. Last year in U.S. history, you guys learned about the 16th Amendment that was passed during the Progressive Era. And that's the time period when we actually created income taxes in the first place. We hadn't done that before. We had a different kind of tax system. Know that income taxes are not just your paycheck. They can also come from just other kinds of income that you have. If you have a house that you rent to other people, and that's an income. If you go to Vegas and you win a bunch of money, potentially you could have to pay taxes on that. If you have a family member that passes away and leaves you a large estate, that technically is income. So income taxes affect a lot of different things. There's other taxes you pay too, which certainly have a personal finance component to them. You pay taxes on the value of your property, like your home or potentially an apartment if it's something you're purchasing. Some places even put property taxes on your car. We pay sales tax. You guys have been experiencing that since you were little. First time you started buying something and you realized it was more expensive than what the label said. There are taxes on gas, there are taxes that we pay into the local level, and we'll get to all those later. So today we really just want to focus on the income tax. So one of the things that's important is that you understand the difference in these two concepts, your net income versus your gross income. The reason this is important is because when you're doing things like creating a budget, determining how much you're going to save, what are you going to put into a 401k, some kind of retirement fund, you have to figure out what your bottom line is going to be. Your gross income is what your salary is before we start to take deductions out. So if you make, for ease of calculation, if you make $10 an hour and you work 40 hours a week, multiply that out, that's your gross income. But we all know if you've had a job that that's not what you actually bring home. Your bring home is your net income. After your employer does all the things they need to do to your check and they take the money that is owed to different entities, that's your take-home pay. It's what you actually get to spend. So gross income minus the deductions, that's your net income. So actually by law, your employer, depending on the size of the company that you work for, they are required to take taxes out of your paycheck. Now, I will add to that, that's only if you're hired as an employee of the company. If you are a contract employee, that's not the same thing. And for contract employees, your employer does not take care of taxes. So if you ever end up getting a job where you're hired as a contractor, you have to be very aware of that. Your employer does not collect your taxes for you, which means that you are personally responsible for filing your taxes with the government and paying them accordingly. I have a family member a younger brother who this is actually the case for him, and it took him a while to learn that, and he definitely made some poor choices. So the nice thing about the fact that your employer collects taxes from you is that then they're actually paying them to the government throughout the year. So rather than once a year getting this huge bill saying, here's all the money that you owe the government, every time your employer pays you, they collect a little bit of money. And as they collect that, that money is paid to the federal government. So in addition, your employer will collect other things too. They're going to collect a Social Security tax, which is FICA and Medicare. And then if you happen to live in a state that requires state income tax, they're going to collect that as well. If you stay in Texas, Texas does not have a state income tax, so you won't see that on your paycheck, but the bulk of states, the majority, do. So just to clarify, Social Security, that is the Federal Insurance Contributions Act. Every person, you all have to pay Social Security, even though you're not even close to Social Security, and I'm sure you've heard people tell you that it won't be there for you anyway. Social Security is a federal program that was created as part of the New Deal legislation, and it protects people who are retired. It's not a pension. It's not something that completely funds your retirement, but it's retirement benefits to make sure that old people hopefully aren't living on the street. It also provides benefits for people who are dependents. So if you are retired and your spouse passes away, then you can actually receive their Social Security to kind of keep you taking care of you. Some of you, potentially your parents may have passed away when you were at a young age, and you might be receiving their Social Security benefits. It also can benefit people who are disabled and no longer able to work. Medicare goes along as a part of FICA. And Medicare is like an extension of the Social Security Act. It was passed in the 1960s under LBJ and part of the Great Society. The Medicare tax, what it's doing is it's helping to provide medical benefits for people when they turn 65. So when you turn the age of 65, if you qualify for these. Again, it's not full insurance. It's basic needs that they're taking care of as part of Medicare. So these will start coming out of your paycheck. So these will affect your net income, absolutely. But this is not money that you're going to be able to reclaim until you're older. So this is money that you're just going to pay every single month, and there's really very little you can do about it. You don't determine how much this is. The government determines this. There are other things that may potentially be taken out of your paycheck if you purchase health insurance from your employer. If you choose, and I would highly encourage you to do so, to participate in a retirement savings program through your employer, such as a 401k or a 403b, and potentially some employers actually allow you to make charitable contributions through them as an institution. All of those things could potentially affect your take-home pay. Income taxes, though, you will make some decisions about how much money your employer is going to take. And remember, why do we pay income taxes? Well, there's all those things that the government provides for us. Education, national defense, roads, bridges, all of those public goods, things that the government is providing you, we need money to pay for them. And that's what the income tax goes to pay for. So you need to understand 3 different forms that are likely to pop up for you early in your career related to taxes. You need to be able to differentiate these and know how the decisions you make on these forms will impact your bottom line. So the first one is a W-4. I suspect that many of you have already completed one of these. If you have a job, you should have. So this is something you do. When you get a job, you are going to complete a W-4, and on that W-4, you are telling your employer how much money you want them to withhold from your paycheck to pay income taxes. It's an estimation, basically. If you look here on line 5, it says the total number of allowances you are claiming from line H or above. The whole idea of allowances there are certain things that all people are allowed to deduct from their taxes. If you look at my salary, or if you look at Coach Hirsch's salary and you add it up with our spouse, we make X amount of money, and then theoretically our taxes are going to be assessed on that amount of money. But there are things that you're allowed to deduct. Both of us have 2 children. Children are deductions. So he and I can both go into our taxes and say, all right, we're going to claim them as an allowance, which then means that the federal government or that our employer, FISD, is going to collect less money from us because we have said we want to take these allowances. The more allowances you take, the less money your employer is going to take from you out of each paycheck. But be careful, because sometimes if you claim too many allowances, at the end of the year when you file your taxes, the consequence might be that you haven't paid enough. So however many allowances you claim is going to determine what your tax refund or your tax bill might be when it comes time to actually reconcile your taxes. So a W-2 is then something that your employer is going to give to you. So you're required to be given this by January 31st of the new year. And when they give you that basically is going to serve as a report to tell you how much money they gave of yours to the federal government. Also, if you happen to have state income tax and all of those things, it will tell you how much money they paid for FICA, Medicare, Social Security, etc. And so then what's going to happen is that you're going to have to go through a process and see, well, this is what my employer paid. This is what the federal government says I owe, and figure out how those are going to work together. Usually they're not identical. And typically what's going to happen is you either pay too much throughout the year and you're going to get money back in terms of a refund, or you didn't pay enough and you're going to have to pay money in because you actually still have a debt. And so that is going to be calculated most basically through a 1040 EZ form. And you fill this out and you're going to send it to the IRS. You can do this online. You can do it through software programs. I think we usually use TurboTax, or there's like a Quicken form. There's like several different software programs where you can file electronically. But very basically, this form is free. You can download it online and print it out. You can go to the post office and pick one up. And it simply works you through all your income. You're going to add in things that maybe your employer didn't know, like I had rental income, or I, went on a game show and I won a bunch of money, something like that. And then it's going to reconcile what you paid. And then you're going to come down here and you're going to figure out the deductions you have. And at the end, there's either going to be a refund, as you look right here, or there's going to be the amount that you owe. And that's basically going to figure out, are you going to be happy and you're going to get some extra money that year? Or you're going to be disappointed and you're going to have to write a check to the federal government. If you end up owing money, what can you do? You actually can't write them a check. You can physically, if you know how to do that anymore, or you actually can do like an electronic draft where they can just take the money out of your account. The other thing that you can do is you can contact the IRS and say, look, I don't have this money. I'm not able to pay that. I don't recommend that because that doesn't come without consequences. But if you don't have the money, they will work out a plan for you. They can simply take out more. They can take it out the following year. So the government can take out more taxes next year to pay off the amount that you owe. Understand, though, that that does come with interest attached to it. So if you owe the government money and you don't pay them on time, they will attach an interest penalty. You also can file for an extension. Something happens, you need more time to pay. Again, I want to encourage you, this is happening. So unless there's some kind of emergency, there's something critical that comes up, something unexpected, you will know when taxes will due. Historically, that's April 15th. The date can fluctuate based on if it's a Saturday or a Sunday or, something like that. But for the most part, that's when your taxes are due. And so I would encourage you to kind of plan for that. So if something happens and you end up owing money, what could you do? Well, the thing that I would encourage you to do then is if you don't want to pay taxes at the end of each year, you've probably taken too many allowances. And you are welcome to go to your employer, fill out a new W-4, which will then tell them, I need you to change my deductions and change what my paycheck is going to look like. And I definitely have had to do that throughout the years. It's highly encouraged that you continue to revisit that every year and make sure, given your new financial circumstances, that you are taking the correct amount of allowances. Okay, hopefully this has helped you to answer the questions about taxes. If you have any questions, please come by and talk to Coach Hirsch or I to make sure that you fully understand. Bye-bye.